Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another daily cryptocurrency market update. I do apologize for the lighting in here, something that definitely needs to be worked on. We are back on the camera, as you can see, and this is going to be a daily cryptocurrency market update video. And we've got a lot to discuss as always. We're going to be looking at what's going on with the price, predominantly Bitcoin. I'm talking about Bitcoin in relation to everything going on right now. Bitcoin is a very tired swimmer against quite a strong tide, the tide being the macro, Bitcoin being a asset class that finds itself within that kind of ocean. We're going to be really diving into all that, looking at the Fed minutes, looking at a number of things. I think bears are being very premature at the moment, and we've seen these bears pop up throughout the past 9 months. And it's been very continuous in regards to calling crashes. Maybe eventually they are right, but I do not believe that now is the time. And actually, I think if you look at Bitcoin from an objective point of view in regards to its price, we'll get rid of all these draws, really doesn't look too bad. There's times where you want to panic and be bearish, like invalidation of actual market structure. And there's times where you just want to say, okay, this is a pullback until it's shown us more. I understand right now that emotions are probably flying pretty high across the board in regards to the perhaps boringness of the market, the frustration that you see in the cryptocurrency market. But this is part of the birth of any kind of revolution, any kind of technical revolution anyway. I think there's a lot more reasons to be bullish than bearish right now on crypto, despite what is perhaps a bleak macro outlook. And certainly right now is a tide that crypto has to swim against in regards to the first uptick of inflation that we've seen in over a year, i.e. higher print than the previous one. The idea of higher rates, the dollar being very strong on the back end of this, and there's a bit of an FX kind of war going on with the dollar being the world reserve currency and it having to show its strength. And of course, things like yields going up that are essentially front-running interest rates. So we've got a lot to talk about. We'll also talk about some breaking news over the past 24 hours in regards to Valkyrie filing for a Ethereum futures ETF. We had some pretty big news from Coinbase, a big win, and we'll talk about everything in between. Let's maybe start things off by actually looking at the Bitcoin 4-year cycle theory, something a little bit different, but a good place perhaps to start, and looking at where we are in relation to past cycles. This is the Bitcoin 4-year cycle theory, and the halvening is the vertical line that is going down the screen. And this is the next halvening that we have is around about the 24th of April. Round about April. I'm not sure of the exact date. I'm sure it's on here, but this is a monthly chart. So if we drop down the time frames, it will show up. I think it's around about the 24th, I believe. But this is essentially what has dictated Bitcoin's price really since its existence. It's basically moved on the halvening, which is where the supply of Bitcoin gets cut in half and the price theoretically needs to adjust in order to accommodate for miners and the demand and everything or the supply and everything in between. So we are currently around about 240 days out from the next halvening, which will occur into next year. And if you look at where previously we've been at this point, we're not doing anything that dissimilar. If you look at it from a price point of view, here Bitcoin went up on the run up into the halvening. You can see here as well, it went up. Here it kind of drifted off. And then of course you had the March 2020 capitulation. What's going to happen here? It could be that we do something similar to this, or perhaps this, and that things start to pick up closer to the halvening, which is likely going to see ETFs have decisions made on them and everything in between. So I'm not particularly bearish from a big term time frame on Bitcoin here at all. I think it's very healthy. I think we're holding this 30 weekly moving average. You guys will know that we use 30 weekly moving averages in our stage analysis. And things don't look too unhealthy. I do not think that this year and by the halvening, you would have had the crash that the yield curve is predicting. Everyone's kind of predicting a crash, and every time there is a pullback in the market, you know, the narrative comes about that, okay, the crash is here. Well, that hasn't been the case. If you look at the stock market, for example, this is not what I would call particularly bearish at all. People are very bearish on stocks, but actually the price action does not warrant that opinion. You know, if you look at who's in control of this market, it's very much the bulls. The pullback does not warrant the advance. So who's in charge of this market? Okay, there's levels where you have to say, okay, at this point now the strength's clearly in the seller's court. But until you see that, or you see the early signs of that, which we don't see yet, at the moment, this is a technical pullback that we looked at for the stock market that has now been accompanied with a kind of macro narrative that we're really not that worried about. But going back to the Brave New Liquid Coin Index, we're not doing anything too dissimilar. And this is what I mean about the pre-mature bears that we're seeing at the moment. Talking about Bitcoin from a price point of view, and before we go on to a little bit of macro stuff, this still looks very healthy to me and is actually something that we have listed as a possibility coming down to the sort of 28, 27 mark in a similar thing to what you did here and here before we see that upside continuation. Bitcoin is a weak swimmer, i.e. exceptionally low volatility, record low volume, at least from 2019 onwards, that is swimming against multiple negative forces in regards to the macro environment. And what do I mean by the macro environment? Well, I mean the Federal Reserves, or the Federal Reserve and central banks and what they're doing in regards to monetary regime, which is a huge factor in the markets. This was some of the highlights from yesterday's minutes. The federal officials see upside risks to inflation, possibly leading to more rate hikes, minute shows. More rate hikes, you've got to remember, this market sold off on the expectation of rate hikes and ultimately has rallied on a decreasing inflation coupled with a lowering in hikes. If you look at when they went from 75 to 50 to 25 to a miss and then another one, you know, and now it's having to compete with uncertainty, but hasn't shown us that that uncertainty is what's going to lead to a crash at this point. I do not believe that the crash occurs until later on. We've done a lot of reviewing of this, potentially it going into 2025, back end of 2024 into 2025 is when I think the crash actually occurs. And I think the yield curve somewhat shows us this. You know, the yield curve typically doesn't play out, and this has been a very accurate indicator of crashes until a point of uninversion. You've got a while until that occurs, in my opinion, and it will be a big crash that will likely be debt denominated. The dollar has been very strong, so you've got upside risks to inflation, which are leading markets to be uncertain about inflation and what the Fed's going to do as a response and how that's going to affect the markets. It's at a technical point for the stock market, which we know we're correlated to. The dollar has been exceptionally strong on the back end of all this also. The dollar is at a very interesting point where actually you're consolidating right around, and this is the thing about premature bears right now. The dollar's at resistance. From an inflation metric point of view, which people don't talk about, natural gas is at a resistance. Oil is also at resistance. You've decided to flip bearish on the markets at a point when everything is now running into resistance and you've missed the move. Lots of premature bears. They will eventually be right, and we agree with the bears on the fact that a crash is coming. We just don't think we think it's a while out. And the stock market's at technical resistance after being very overextended and having a very good run. This is not a bearish chart, in my opinion. The only bearish insight that people are getting is the one from the news outflows, in my opinion, and the kind of hashtag macro, which is only certain parts of the macro picture, not all of them. Bitcoin is a tired swimmer against all of this, and ultimately is going to go with the path of least resistance, in my opinion, at a point where there's very low volume and the current, which can change very quickly, sentiment is quite negative from a kind of rates going up, dollar strong. It's a lot of headwind, and it's only really doing this. You would have seen a far more aggressive price action if the crash was somewhat imminent, which I do not suspect it to be. So I think there's a lot of fundamental difference between, we looked at this yesterday, where we are currently in 2008, and I think there's a lot of fundamental differences with other crashes that people are citing. And we've done lots of work on interest rates and lots of work on lots of things that all suggest the notion that this is not perhaps what it was. You know, these are fundamentally different markets. You know, you can see this is very much a bear market where the bears and the sellers are in control. This is very basic, and this is why I'm kind of a bit confused with why people are bearish on Bitcoin. Altcoins are maybe a different story because they certainly haven't done anywhere near as well and are what we would call still in a stage one. We know altcoins lag Bitcoin, but there's a fundamental difference to these markets, in my opinion. Not only in regards to the advancement, but also in regards to the pullbacks. You know, this is very, very basic market structure, which is why I'm, again, confused with why people are so bearish at this point in time. Bitcoin is consolidating around a very, very key level of significance, 30K. This is very roughly drawn, by the way, guys. And ultimately, you should expect resistance at resistance. You know, this gets taken eventually. This is very basic, again, market structure that I don't believe people need to worry about until a point of invalidation. You know, anybody that's familiar with Dow theory will be able to tell you that this is really how markets go. Maybe you've done, things do often come in three impulses. Maybe there's a bit more of a correction needed. But until you start to invalidate structure, I don't know why everyone's so bearish. Premature bears everywhere. Not meaning that they won't be right eventually, just meaning that I don't think now is particularly the best time to flip bearish. And just like this kind of meme shows, this has never happened to me before. Plenty of crash callers along this route. Moving on to a little bit of sort of fundamental news for crypto. After 2 years of waiting, Coinbase said it finally has won approval to list crypto future products in the US. Very interesting. I think, again, crypto is at this kind of pivotal point right now in regards to an ETF, in regards to global recognition. This is a big news. We also see breaking Valkyrie files for Ethereum futures ETF with the SEC. You will not just have Bitcoin ETFs. Eventually, you'll have altcoin ETFs, basket of altcoin ETFs. And that's part of this market becoming recognized and truly utilized. And we are not there yet. You are at a point in crypto where there is that little volume and trading going on. And that little people are actually interested in it, even though it's literally being mentioned and touted by all the major financial institutions around the world, that there's such an opportunity at hand here, guys. You know, this is what this channel is really all about, making sure people do not miss that. And we're going to continue to make these videos. We're going to continue to put our views forward. My honest and general view at the moment is that there is not a reason right here to be as bearish as people are perhaps, as they perhaps are. I think there is reason to be concerned in regards to the macro environment, but just like in 2016, I think those reasons come into play later on. You know, I think 2016 is a very good analogy of perhaps where we are right now, going back over to the charts and going and finding 2016 in regards to actually, this is where we are. Rates potentially line up with this also. I think you're going to see a period of sideways rates where the market likely does something like this into a crash and a kind of meltdown of the economy. It wasn't until they'd stopped upping rates that the problem started to show. And I think that's the same thing here. How many people out there, and this is the thing, rates are bad for markets, right? Well, if you go and do a history on and look at your history on rates, from the point of when they've started to raise rates to where they've ended them, the S&P's always closed higher by the time they stopped the hiking regime. lots of misconceptions and imaginary things that I think play into people's minds in regards to the markets. Let's go back into Bitcoin. Let's get rid of all of this. And let's just do a little bit of a short-term scenario. There is definitely the room for further downside. Point of worrying is here. When you invalidate this, we've got technical targets. We've got so many things that lead all to the same direction. Ultimately, again, you can see some sort of further downside, but we think it results in the same manner of these here. You know, you could see some sort of a deeper correction, possibly coming into the 26s, 27s, potentially, or it could turn around here. I'm not necessarily betting on the downside until there's reason, there's structure to do so. It's just a case of riding it out. And we've really expressed our uncertainty in regards to the markets over the past week or so now. And I think we've been largely validated in that. It's been very up, down, up, down, up, down. But we will see. Ultimately, this is just my own view. Let me know what you guys think in the comment section. It's going to be interesting, that's for sure. It's a very interesting time to be in the markets. And ultimately, we are bulls at this period, even though some people may not see the reasons behind it. Let me know your thoughts in the comment section. On that note, guys, I'm going to love and leave you. If you've enjoyed the content, like us, appreciate it, so as a comment, and I'll catch you all in the next one. Thanks a lot for watching, guys. See you in the next.